Welcome to The Explainer. So, if you've been watching the crypto markets lately, you've probably noticed it's been a sea of red. And if you're kind of scratching your head wondering what's going on, well, you are definitely not alone. Today, we're going to dig into this big Bitcoin sell-off and unpack a really fascinating idea. What if the old rules for trading crypto just don't apply anymore?
All right, here's the game plan. We're going to start with what's happening right now. Then we'll explore two completely different theories for why it's happening. And to wrap it all up, we'll talk about what this could mean for the future of trading, and not just for crypto, but maybe for everything.
Okay, let's get right into it. Section 1, this sudden sell-off. So yeah, this is the big question, right? There's been so much optimism, so much hype around Bitcoin's future. So why are we seeing this huge sell-off? And maybe an even better question is, who's actually hitting the sell button? Well, it turns out it's not the long-term OGs, the people who have been holding on for dear life for years. The data is pointing pretty clearly to what we call swing traders. These are the folks who play the medium-term trends. We're talking months, not years. And to really get what they're doing, you have to understand the playbook they've been using for a long time. So what's in this playbook? What's driving these traders? Well, it pretty much all comes down to one single strategy that has worked like a charm for years. It's this idea of a 4-year cycle. And honestly, it's been a goldmine for anyone who figured out how to play it. You see, for years now, Bitcoin's price has followed this weirdly predictable pattern. You get a massive, explosive bull run, then a pretty brutal bear market, and the whole thing repeats, you guessed it, about every 4 years. People call it the 4-year cycle, and it's often tied to the Bitcoin halving. For a ton of traders, this cycle is the strategy. And the playbook itself it's really simple, but incredibly powerful. Step 1, you buy when everyone else is scared near what you think is the bottom of the cycle. Step 2, you just ride the wave all the way up. And step 3, you sell when everyone is euphoric and thinks it's going to the moon. It's that classic buy low, sell high, but it's all timed to Bitcoin's unique rhythm. And here's the absolute key to understanding the current sell-off. If you are one of these cycle traders, every single historical signal is screaming at you that the top is in. Right now, the cycle is done. The party's over. It's time to take your profits and get out before the big crash. But what if that playbook is wrong this time? What if the whole game has changed, and following the old rules is actually the biggest mistake you can make? That's where this other contrarian viewpoint comes in, and believe me, it gets really interesting. Now, a lot of this analysis comes from a perspective shared by the YouTube channel MoneyZG, and they make a pretty compelling case. The thinking is, yeah, you can totally see why the cycle traders are selling, but they just might be a little bit early. You see, the whole contrarian idea is that the answer isn't buried in Bitcoin's price history. No, the answer is what's happening in the world right now. It's this idea that we have to stop looking at crypto like it's in its own little bubble and start paying attention to the massive macroeconomic forces that are swirling around it. Which brings us to the very heart of this new theory. The new driver isn't the 4-year cycle, it's not the halving, it's policy, the decisions being made by governments. So right now, you basically have two completely different types of traders in the market with two totally different mindsets. On one side, you have the cycle trader. They're looking in the rearview mirror, focused on historical patterns. On the other side, you've got the policy trader. They're looking forward, trying to predict what governments are going to do next. One is selling, the other is holding or even buying. And look, this is a huge mental shift. For so long, every trader, not just in crypto, was obsessed with the Fed. What are they going to do with interest rates? But the argument now is that's not the main event anymore. The real game is being played with government policy, spending, taxes, that kind of stuff. So why this sudden obsession with government policy? It all boils down to one scary word: deflation. Now, on the surface, prices for things going down sounds great, right? Who doesn't want cheaper stuff? But for an economy, it is an absolute nightmare. If people think prices will be lower tomorrow, they stop buying today. And when that happens, the entire economic engine can just seize up. And hey, this isn't just some abstract economic theory. We are seeing real-world signs of this happening. Think about it. Thanksgiving dinner was way cheaper this year. Gas prices have been falling. There's political pressure to lower drug prices. Even rents are coming down in some places. And this poses a really tough question for any asset, including Bitcoin. I mean, if the dollar in your pocket is actually buying more stuff tomorrow than it does today, why would you risk putting it into something like Bitcoin? It's a fundamental challenge. Okay, so if deflation is the big scary problem, then the response to that problem is where the new opportunity might be. And that's really the core of this whole policy trading strategy. And here is maybe the most important part of this whole idea. Governments and central banks cannot, and I mean cannot, let deflation go on for too long. They know it's poison. They know the alternative is a total collapse of the financial system. They have to act. So this creates a pretty predictable chain of events. Step 1, the economy starts to hurt because of these deflationary pressures. Step 2, that pain puts immense pressure on the government to do something to stop a collapse, which leads to step 3, they intervene. They enact policies to spark inflation and get things moving again. So the strategy here isn't to trade the current dip. It's not about trying to catch a falling knife. It's about patience. It's about waiting for the government's response. Because when they're forced to act, and they will be, that usually means stimulus. And all that new money has to go somewhere. And historically, it flows right into assets like stocks and, yes, crypto. And these policy traders are watching for very specific signals. They're not just guessing. They're looking for things like governments cutting tariffs on imports to lower prices, or maybe easing up on the rules for banks so they can lend more money. Even something like a big push for jobs before an election. Any of these could be the trigger. And this really gets to the bottom of it. This new game is slower. It's way more frustrating than just following a 4-year cycle. But if this theory is right, the eventual payoff could be much, much bigger. It's a whole new mindset. So this leaves us with a huge question, doesn't it? Have we actually entered a new era for Bitcoin and for crypto? An era where its own internal code, its own halving cycle becomes secondary, and the only thing that really drives the price is government policy? It's a really provocative thought, and probably a question every single investor needs to be thinking about right now.